Welcome to the Pretty Good Policy for Crypto podcast, where we have in-depth discussions on cryptocurrency policy and regulation. My name is Paul Brigner, and I'm head of U.S. policy and strategic advocacy for the Electric Coin Company. Through these thought-provoking and at times challenging conversations, we aim to deepen our understanding of complex policy and regulatory issues and work towards the development of pretty good policy for the cryptocurrency world. This podcast is for educational purposes only and is not legal or financial advice. My remarks and those of our guests may not reflect the views of our organizations. We hope you enjoy the podcast. Thanks for tuning in. It is my pleasure to welcome Bart Stephens, the founder and managing partner at Blockchain Capital, a venture capital firm. And I would say it is the OGs of venture capital firms in the blockchain space. As I understand it, you started around 2013. You have over 100 portfolio companies, $2 billion in assets under management, investments, just to name a couple, like Ripple, Kraken, and Coinbase, but just about every name in crypto as far as I can tell, and no less than five unicorn companies that you have invested in, which is remarkable in the blockchain space. I think you could almost take credit for blockchain in general. Maybe that's why you're called Blockchain Capital. Maybe you have Satoshi working on your team as well.
We don't have that, but when you're one of the very first venture firms, you do get to pick the available names. And we were at first cryptocurrency partners, then we kind of morphed to Blockchain Capital, and it has been an absolute honor to be a part of working with some of the founders in the earliest days. In building this industry. My kids sometimes ask me, like, Dad, what's your job? And I tell them, well, I'm part explorer. Sometimes I describe our role at Blockchain Capital as kind of like a midwife. You know, we finance companies that are building an industry, the bridges and roads and tunnels, as it were, whether that's zero knowledge proofs, whether that's infrastructure, whether that's wallets or brokerage firms or custody companies or DeFi or Web3, or we had the seed round of OpenSea with NFTs. And we try to approach our mission with humility. We exist as a firm to cater to the needs of founders, and the founders' challenges are significant. As you know, and the nature of your podcast is there's tricky policy issues, there's tricky regulatory issues. It's not just building a software company, like say if you're an enterprise software VC working with a software founder. We're building, decentralized and distributed systems based on open source composable software, and we're kind of having to write the rule book as we go. That's why some of the policy discussions and some of the work that's being done by Blockchain Association and others in DC is just so important.
I appreciate your recognition of that. And yeah, I completely agree. Working in policy here in DC, I think we should take a moment to recognize the special time it is in policy, in the whole policy, and not just policy, but regulatory and litigation, you name it, with regard to crypto right now. There is a lot happening. We have two major bills in the House moving forward: digital asset market structure legislation. We have stablecoin legislation. Markup for both of those is scheduled next week. Amazing. In the Senate, we have Lummis-Gillibrand Responsible Financial Innovation Act of 2023. We have some anti-money laundering bills, one that was just introduced today. On the litigation front, we have the Ripple summary judgment that was just, I think, last week, just in the last few days. So that's a lot. And especially from your background, coming from 2013 to today, did you ever dream of a day where we would have this much happening at one time on the policy front?
Yeah, that's such a good question. And I'm smiling because I was in our Blockchain Capital Slack this morning. We have a regulation Slack channel, and I'd actually posted something about RFK Jr. talking about how he wants to, as part of his platform, have Bitcoin to fiat transactions be non-taxable, to have the U.S. dollar, backed by Bitcoin, and regardless of where you are on the political spectrum, or regardless of what you think about, that candidate, I just think we've come an incredibly long way where candidates for the highest office in the most important country in the world feel the need to address crypto. Because what we're talking about here is more than just like a thorny policy issue. I like to frame what's going on as three new things happening at once. And that's why it's so confusing for people that maybe have a Wall Street background or a traditional tech background. They're kind of looking from the outside in, trying to figure out what all these wackos and oddballs and weirdos are doing in the land of crypto. And I like to just keep it simple. I think we have the rise of a new technology industry that we call blockchain technology. And blockchains, to me, are very similar to the internet. They're based on open protocols, whether it's Zcash or Bitcoin or Ethereum. Just like the internet allows for the exchange of data, blockchains allow for the exchange of assets. And they allow users to become customers. Those customers turn into advocates. They can contribute with their intellectual capital, their financial capital. And that's important. So that first new thing is a new technology industry called blockchain technology. And that itself enables a second new thing, which is a little bit more controversial. And I would argue it's the rise of a new asset class itself that we call crypto assets. And there's a bunch of different species, so to speak. You know, we've got stable coins for payments. We've got Bitcoin. Many see it as gold 2.0. Some of them see it as a electronic peer-to-peer payment system. And then we've got DeFi, we've got Web3, we've got NFTs. There's all these kind of species of crypto assets. And these assets do not fit into the regulatory framework that was drafted for the U.S. capital markets in 1933 and 1934 and 1940. So we've got Tesla technology with horse and buggy rules and laws on the books here in Washington, D.C. And so, you know, the first new thing is the technology infrastructure, blockchain technology that allows the second new thing, which are these programmable digital assets that have different roles and they can evolve and they're governed not by corporations, but by DAOs or independent software developers. But that isn't enough. There's more going on here, and you can kind of feel it if you're engaged, whether in policy or in a Discord or an open source software project. And I would argue the third new thing is most important, and that I would posit that crypto is an online social movement that is inherently political, and it has its roots in libertarian thinking. We know this. Satoshi Nakamoto encoded in the Genesis block, front page of the Times of London, talking about the chancellor on the verge of a second bailout. So what I find super intriguing intellectually and emotionally engaging is crypto culture. What is crypto culture? Crypto culture reflects the attributes inherent in those first two new things, the technology itself and the asset class. It's based on transparency. It's based on open source software, not, you know, Microsoft's business model licensing you software. It's based on free speech. It's based on privacy. It's based on, you know, how can we reimagine the coordination of labor and capital? That's the essence of capitalism itself. So crypto culture to me is led by young people. These are the founders that we back at Blockchain Capital are, generally speaking, they're in their 20s. Sometimes they're in their 30s. We backed a teenager the other day. And
Wow.
Yeah, he brought his dad to the meeting. It was really cute. My point is that most online movements that put a dent in the universe are usually led by young people. And they're usually led by young people that feel disenfranchised by the system as is. And I could make a strong case to you right now that the system as is here in the United States, and generally speaking, our global capital markets, has been captured by regulators. It has corruption. I hate to speak so pointedly, but when you take a look at the regulatory hostility over the last 2 years, it used to be uncertainty. It's hard to, you know, come to any other conclusion. And so crypto culture is fundamentally a protest culture. It's based on open source software. It's based on individual contributions, whether it's intellectual capital or financial capital. It's based on transparency. It's based on freedom. These are righteous values. It's why people are so passionate about crypto. And it's why I get up in the morning is to, with my colleagues at Blockchain Capital, back entrepreneurs that want to change the status quo. Right now, we live in a surveillance society. The internet monopolies that track your usage when you log on to Facebook, when you click Apple or Google button, they're tracking you around the web forever. You are the product if you're not paying anything. And there's a bunch of interesting projects, I think, that are going to address that. But there is a groundswell of young people in particular that feel enfranchised by blockchain technology, by crypto assets. They feel like this is not their father's asset class or their grandfather's asset class, and they want to be a part of it. And it is that passion, it is that culture that I think can change the system. And the system, as we know, as it sits right now, is dominated by banking oligopolies, internet monopolies, and I think it's ripe for change.
You just deeply inspired me. So that was fantastic. I didn't realize I could just tee you up and let you run like that, and you would just generate this amazing speech.
If you can't tell, I love my job. Like, there's nothing more exciting than, you know, backing founders that are putting a dent in the universe. And we just approach our job with humility. But as you know, and the subject of your podcast is, our biggest challenges are not with scaling Ethereum. They're not with the Lightning Network. They're not with how do we grow a traditional tech industry. all of our challenges go through Washington, D.C. It's why I'm spending more and more time here. It's why the work that the Blockchain Association does is just so important. And we've been a longtime member and supporter. My colleague and partner, Joshua, is on the board of the Blockchain Association. We support Coin Center. We support DeFi Education Fund. The work that is being done here in DC, I think, is existential in terms of where we are to that inflection point that you mentioned at the intro. Now is the time to advocate for our industry and to educate. The truth is that our political elites here in the United States on both sides of the aisle, frankly, are in their 80s or they're in their 70s. And I'm not an ageist. I am 49 years old. That makes me one of the oldest guys in crypto. Like, I'm really thankful to Joe Lubin and Tim Draper and some other guys that are 10 years older than me that are in this industry. But the truth is, this is a young person's industry, and that's where change comes from. Back to my comments on kind of crypto culture and innovation. And it's a significant educational challenge to educate our policymakers and our regulators on a tricky new industry. Again, it's 3 new things happening at once that I discussed earlier. But the time to engage is now. I'd encourage all of your listeners that are involved on a crypto project, whether they're a retail user or involved in a protocol, to think about, how can they help out in kind of the educational and policy efforts that are front and center right now on the bills that you're talking about. The stablecoin bill, incredibly important. Digital asset market structure, incredibly important. Because what we've seen over the last, I would say, 3 to 4 years in particular, is the offshoring of innovation. I mean, at Blockchain Capital, unfortunately, and I take no pride in saying this, we give a slight preference to protocols and companies that are outside of the United States. Why? So Gary Gensler can't just randomly sue them,
Less risk, right?
Less risk, yeah. And, if you're in a fiduciary like I am, we're a registered investment advisor. We manage money for sovereign wealth funds and pension funds and fund of funds and university endowments. And we take that job very seriously. I wish that we had clear rules of the road here in the United States. The truth is we don't. Gary Gensler is not being truthful when he says that the rules are clear. And it is super obvious to anyone paying attention that we need Congress to act. It is the job of our legislative branch to create new laws. It is the job of unelected bureaucrats at growing administrative agencies to enforce those laws, not to create laws out of whole cloth or to put their thumb on the scale against innovation in favor of incumbents. That's what we see from Gary Gensler. That's what we see from Liz Warren. And it is not in the mandate of these administrative agencies or a random senator from Massachusetts to pick the future technology direction of this great nation. It would be like in 1995 if you let the Postmaster General figure out how tech was going to evolve over the next 30 years. If I was the Postmaster General, let's say I was the former CEO of the largest printing company, I would have looked at email and said, oh shit, this is really bad for my printing business and sending physical mail. But my point is, what if that Postmaster General that was captured by his legacy industry, printing, allowed the country to not have the internet based on email? Email was the most obvious application of internet technology in 1995 when I started my career. But eventually we got e-commerce, we got social media, we got cloud, we got iPhone, we got all sorts of interesting companies. And if you look at where these companies were domiciled and built, they were U.S. companies. And now I can make an argument to you, they're too strong now, the Googles, the Apples, the Microsofts, the Facebooks. But we had a benign regulatory environment. The entrepreneurs that were building Netscape or Excite or Yahoo or Google, they knew the rules of the road. And what that allowed for is capital formation. And that is currently our challenge now. The enemy of capital formation, which is a mandate of the SEC, by the way, is uncertainty. All we want to know as responsible investors and entrepreneurs in our industry is the rules of the road. Can we drive the crypto car 10 miles an hour, 100 miles an hour? Do you want us to drive in reverse? We'll do that. Just tell us. Right now, to stick with the traffic analogy, we got a lot of red lights, a lot of yellow lights. Red lights when Gary just randomly sues you, kills a company. 2 Stanford dropouts, can never work again. Yellow lights, tied up in lawsuits, Ripple, Coinbase, whatever, for years and years. There's just no green lights. And if we're going to maintain our competitive advantage, which I would argue is a dynamic economy that fuses smart venture capital with the best entrepreneurs on the planet, we want that done here in the U.S. And for that, we need clarity. And for that, we need some of the regulation that you referenced earlier.
Yeah, you talk about offshoring and how much of this is happening outside of the United States. I talked to a founder of a decentralized trading platform recently, and it's not a platform that I'd experienced because I can't legally do so. And he told me all about these derivatives that are available, perpetuals that I've never had a chance to use and explore and trade with, but they're really powerful and they're really straightforward. And it's something that can be done in a decentralized way that is so efficient. And as a trader, I'm sure you see these things, and I think that has to probably drive you crazy that, you spent a lot of time in trading. You had your own hedge fund. So
I am a recovering hedge fund manager.
Okay.
I was a hedge fund manager for 10 years with my brother and co-founder, Brad Stephens. We're the two founders of Blockchain Capital. We've been working together for 20 years. And we don't trade anymore, just to be clear.
Okay.
So Blockchain Capital is a venture capital firm. We don't do trading. We don't do high-frequency stuff. We're kind of picks and shovels investors at primarily the early stage part of the market. So seed stage, A round. We have a new opportunity fund that invests in later stage companies as well. But your point is a good one. When you look at some of the innovations coming out of crypto or DeFi, automated market makers, AMMs, there wasn't an analog in the equity capital markets. When you look at perps, as you discussed, kind of pioneered by BitMEX and others, that's a novel and new financial product. What we see in crypto capitalism is a new way to draw on human capital from around the world. Traditionally in financial services, and I've worked at investment banks, I worked at E-Trade as my first job. You work for a corporation. That corporation, you're in a headquarters. A headquarters is all the people there, and you're kind of at the will of your product manager, or ultimately the CTO or the CEO, and they kind of give top-down direction. Crypto capitalism and DeFi in particular kind of flips that on its head, where anyone can contribute and add to Uniswap's next kind of proposal, or we're very involved in the kind of seed stage of Aave, one of the leading kind of DeFi protocols for borrowing and lending. And what we see is just this really fertile ground for young people with maybe atypical backgrounds. You don't have to go to Wharton or Harvard Business School or Stanford Business School, none of which I went to, by the way, to contribute. You can contribute with your financial capital. You can contribute as an influencer. You can contribute with your intellectual capital. Maybe you write code and contribute it to the GitHub. And so this is a really powerful model. What we're doing is we're drawing on human capital and financial capital from around the world in real time, and the product development cycles are measured in days or weeks, which is very different than even a traditional fintech company where it might be mentioned, take months or years, or at a bank, a decade.
Right.
And so that's why some of these Luddite policymakers, they're just pushing against the future, and they're on the wrong side of history. You can't put this genie back in the bottle. This is the fastest and largest open source software movement the world has ever seen, and it's not going to stop. It's only going to accelerate. Why is it going to accelerate? Because it enfranchises people, it excites people, it captures the imagination, it allows people to contribute in a creative way and build on top of something. I don't have to invent a borrowing and lending protocol anymore. Aave's done that, and I can stack that with Uniswap, and all of a sudden you can do borrowing, lending, and together. So it's kind of this notion of DeFi building blocks. And what that really means is increasing product development cycles. And, crypto is an adversarial environment. So you're kind of testing things in a very real and challenging environment. And there's goods and bads with that. Sometimes customers lose money, and that's bad. Sometimes product development happens at a rapid fashion. I think that's good. And I think it's important to be even-handed, especially when we talk to policymakers. Crypto isn't the answer for everything, but I think it really is the answer for some of the problems that plague our society here in the U.S. Distrust in institutions, whether that's the CDC and NIH, whether that is the Federal Reserve that's been blowing asset bubbles for 40 years, whether that's the two-party political system, whether that's people that are concerned about, regulatory capture and the growth of the administrative state. These are unelected bureaucrats that kind of define how we live our lives, whether it's banking or technology issues. And again, back to my comment earlier, crypto is fundamentally a political impulse at its very core. And that is why we all find ourselves in DC right now with the important, and I would argue sacred challenge of educating our policymakers to make sure that America stays relevant and can stay the home of innovation. Just like we built these incredible internet companies, arguably too dominant over the last 30 years. If we get this wrong, this innovation will happen in Japan. It'll happen in Dubai. It'll happen in the UK. MiCA is already approved in Europe. It's not great, but it's something. And what we see right now is just outright hostility. I mean, Elizabeth Warren and Gary Gensler are saying the quiet part out loud. They're saying, This is, I'm raising an anti-crypto army. Gary Gensler on one hand will say, we are a technology neutral industry. On the other hand, literally the next day, he'll say, I don't see a need for crypto. That is not a technology neutral statement. So it's great to see him losing in the court. It's great to see his staff quitting because this is an industry that is bigger than any one single regulator, and it's not going away. It's not going to be uninvented. Crypto's here for good, to borrow a blockchain association tag phrase, which I love.
And their new website too. We should give that a plug. I love how you directly address this as a cultural development, a cultural phenomenon that is based on this new technology, and it is fundamentally political. Not many people do that, and it's refreshing that you do that. And I think what I see is that all of the values that are built into this culture are really deeply democratic and American in so many ways that it is remarkable. We see that there are people in Congress and at agencies that are attacking it. It just doesn't make sense. You would think that they would want to help and say, look at the good things and help move those things along instead of doing the red and yellow lights and give us some green lights. So I completely agree with that observation, and thank you for being so direct about it. You mentioned some of the policymakers that, quite honestly, they're not of the younger generation, and they probably don't understand the technology. They just don't get it. And I have a lot of fear in that, because what I see often is that many of these, even the current legislative proposals, are trying to take what we have used in the past and just slightly tweak it, just adjust it just a little bit so that we can try to work this in. And it's just like not fitting. And especially on things like illicit finance and anti-money laundering, KYC related regulations, those things really don't fit in the same way. I think you have to take a whole new, fresh look at it. Is that kind of what you're thinking, or is there any particular solution to that? Is there a way to get people to look at this from just a fresh start and from a new technology perspective?
I think you put your finger right on the challenge, and it's important to admit that these are challenging topics. Like don't tell my a non-OG crypto friends, but I actually have a little empathy for the regulators in some of this. Like, this is a whole new paradigm, and by that I mean, if you look at the way the U.S. capital markets are regulated, these laws going back to the 30s, they basically depend on intermediaries. And what financial regulators do, like the SEC or the OCC or the CFTC or FINRA or FinCEN or we have 9 financial regulators. So let's start there. That's a problem. In the UK, I just had some great meetings with some of the members of the consulate there that are actively recruiting crypto companies and venture capital firms like Andreessen Horowitz and Blockchain Capital. Is they have 1 regulator. We have 9. And the way that our regulatory scheme is set up now is basically kind of it outsources a lot of the policing, if you will, to regulated intermediaries, pretty much banks. Those are kind of the choke points, as it were. And if you think about it from a blank page, what are we building in crypto? We're building decentralized, distributed systems that by definition are trying to remove middlemen and gatekeepers that encourage permissionless innovation, encourage participation, not just as a customer, but as a contributor, as an owner. And so the rules on the books are just wholly unsuited. I mean, I think I mentioned it earlier, but it'd be like showing up, with a Tesla and having to comply with horse and buggy rules. And you'd go into the SEC and they'll say, well, where does the horse drink its water? And you're like, this is a Tesla. And you're like, well, where do the horseshoes go? Like, where are the hooves? And you're like, these are tires. This is a Tesla. So what we have is like kind of agencies and entrepreneurs kind of talking past each other. And so what we need, I think, and the digital asset market structure bill is a step in that right direction. I think stablecoins is probably the easiest, lowest hanging fruit. Just a note on stablecoins. At Blockchain Capital, we fund all of our companies in stablecoins. These are 24/7 payment networks that are backed by US dollars if they're done well. So I'm not talking about Terra Luna. I'm talking about USDC or, Paxos's stablecoin or even Tether. The money's there, by the way, at Tether. I happen to know that. So what I see is 24/7 payment network backed 1-for-1 with the US dollar. By the way, that's better than a bank. Your fiat reserves at a bank are backed 1/10 to 1. So there's a reason why Jerome Powell stepped in personally and stopped Libra. That hasn't been widely reported, but he made a phone call to the banking partners at the 11th hour, late in June before Libra was supposed to launch because he was scared. If you can have a stablecoin that is backed one for one, academically speaking in economics, that's called a narrow bank. That is a product that everyone would use. I would rather have my bank have just my dollars open 24/7 on a decentralized and distributed system rather than have 1/10 of my money. I'm not convinced that in a one-click kind of fintech world, fractional reserve fiat banking can survive a 40 to 70% run on your deposits like we saw at Silicon Valley Bank. Silicon Valley Bank didn't get in trouble because it was banking Silicon Valley companies or because it was doing crypto. It got in trouble because it was long too much US Treasuries, the safest instrument that's supposed to be out there. And so, there are a confluence of factors that are converging at once. I would argue distrust in financial institutions, distrust in technology institutions, distrust in policymakers, questions around the viability of fractional reserve fiat banking. At the same time, we have this incredible new technology around stablecoins and a different model of financial services that doesn't depend on, deputizing these financial institutions that could unbank you tomorrow or me, maybe even for this podcast. Bank of America drops me. Bank of America isn't actually my bank, but we've seen that in Australia, Canada, the UK. If you say something that is not popular politically, you can be deplatformed. You can be debanked. That is not what the founders of this great nation had in mind. I think what the founders of this great nation had in mind is something that is closer to the values that we talked about earlier in terms of what is crypto.
It seems to me that we're going to need something that is really transformative, some political influence that would come in that could really communicate the values here. Is it going to be, do you think, a presidential candidate? That seems like it might be needed to me because I don't know how else we're going to break through some of these challenges.
It's a great question. As I mentioned earlier, if you would have asked me 10 years ago when we were making our first investment into crypto startups like Coinbase and Ripple, eventually OpenSea and Aave and others, I never would have guessed that crypto would have been so front and center in terms of you can't be a politician running for Senate or Congress or the United States without a policy position on crypto at this point. And most of that's done by kind of staffers that are younger, that understand this technology. Elected officials, if they care about young voters that are aware about important technologies, whether it's social media or crypto or AI, there's not a lot of upside to being anti-crypto. I'd be surprised if Elizabeth Warren gains a bunch of new voters for her anti-crypto army. She is holding the water behind the scenes for large financial institutions that she professes to dislike. Younger voters care about this stuff. They care about open source software. They own crypto disproportionately. So do people of color. This isn't like an old, rich, white guy, Republican asset class. It is really distributed and kind of decentralized. It's got a diverse group of holders that are across the board young. Young people know something like kind of deep inside them that the system that we're kind of struggling against is broken. I don't know if crypto is the answer to all of those things, but it's increasingly relevant for those that are seeking highest office in this country, including the presidential office, but certainly congressmen and senators. It's why we spend so much time proactively briefing elected officials, policymakers, regulators. I have had thousands of conversations with Washington, D.C. people, regulators, policymakers, elected officials over the last 10 years, proactively, just to try to brief them. Here's what's coming. This is a little bit scary because you don't understand it. Let me demystify it for you. And most of these conversations, just had an incredible conversation with Ro Khanna in his office yesterday, who's a Democrat. This shouldn't be a partisan issue. I'm a registered Democrat. I'm a moderate. I'm probably more of a libertarian personally, but it is a mistake for Republicans or Democrats to make this a partisan issue. This is a young person's issue. This is an innovation issue. This is an American competitiveness issue. And you don't want to be on the wrong side of history here. Being against the internet in the 90s, you'd look like a fool now. And there are people like that, whether it's Krugman talking about the internet's not going to be more important than the fax machine. Some of those quotes really don't age well. And so, listen, I don't mean to pick on Elizabeth Warren and her anti-crypto army, but it's really hard to see why that makes sense if you're in your 20s or your 30s and you're politically active and you're on Twitter and you have financial assets yourself that are invested in these assets, whether it's Bitcoin, Ethereum, or Polygon, or whatever. And so these protective actions by regulators like the SEC are really just hurting young people's pocketbook. and entrenching a belief somewhere in their gut that the system is rigged against them. It's not a healthy culture. And so I think crypto culture is a protest culture. I think it is rightfully shining a light on regulatory capture and corruption. And it is our job as people that care about policy, responsible stewards of intellectual and kind of crypto capital, to do the best job we can educating these elected officials and policymakers. It's not easy. You do it all the time. You do a regular podcast. You know these challenges. I've been doing it for 10 years. But it's important work. I would argue it's righteous work, and it's very much in line with kind of, I think, the values of what this great country was built on.
Couldn't agree more. And thank you for recognizing our work. Wanted to touch a little bit on a couple of topics. I think we've covered a good bit of what's been going on in the Hill, but I have to take an opportunity to talk to you a little bit about the VC landscape as well. And just yesterday, I think there was an article that came out, maybe it was on Crunchbase, talking about a really dramatic drop in VC funding from last year to this year. And I couldn't imagine anybody better to ask about that. And this is specifically in Web3. So I know you're funding companies. You did that even this morning. There was an announcement about that. How does this affect you? And does this reflect what's happening in your organization?
Yeah, so a couple comments there. First, to speak to Blockchain Capital, you're right. This morning we announced a $40 million lead investment, Series A financing for a company called Risk Zero that's bringing zero knowledge proofs to, like, let's say, generalized computing audience in addition to the crypto market. And just want to take a moment to thank Zuko and the pioneering work done by Electric Coin Company and Zcash. And what we're seeing is zero knowledge proofs are having all sorts of interesting applications in terms of scaling Ethereum and how can we, protect privacy, but also prove veracity. Just a lot of incredible stuff going on there. To your question on the venture landscape, it's true. We're in a crypto bear market. This is my third crypto winter. 2013 and 14 was pretty rough. 2018, we survived. What we see in crypto winters in the past is, these are highly cyclical markets. Crypto booms and busts about every 2.5, 3 years. What's different about this market is we have a crypto winter set against a macroeconomic landscape that is much more uncertain. We've got issues around inflation. We've got issues around unsustainable spending and, sovereign debt crisis. We've got all sorts of problems in the traditional tech equity markets where a lot of tech stocks have crashed. But some of the biggest companies keep getting bigger, and there's NVIDIA, AI boom. So it's just a lot of kind of confusing signals, I would say. So if you're an asset allocator, like a pension fund manager, you allocate some money to stocks and some money to bonds and some money to hedge funds and some to crypto funds or VC funds. And crypto funds are a subset of that. And what we've seen is, listen, I feel really lucky that at Blockchain Capital, we're in a really, really fortunate position as the oldest and most established crypto native VC firm. But that's not the case across the board. What we see through a lot of crypto winters is when the price of Bitcoin and ETH skyrockets, a lot of what are called tourists come into the market. By that, I mean generalist VC firms or private equity firms that maybe don't understand some of the topics as well that we've discussed today. What is the technology? What is the asset class? What is the culture? Why does it matter to be aligned with crypto founders, to be able to vibe out with them, really understand why they get up in the morning? I don't get up in the morning because I just want to make another unicorn. I like that, yeah, but I'm in this for the values. I'm in this for the technology. I'm in this to change the world and support the founders that are doing so. And so what we see now is some of the kind of fair weather fan investors. You really have to be kind of in the weeds. You have to be in the trenches and on the front lines in this war, in building this industry, to understand crypto culture and the founders and what motivates them. And so the tourists, they come and go. They take their toys and they go home. And that's fine. But the founders that really matter, they notice that. The founders that really matter in this industry that are building a next generation Web3 protocol or a new NFT design or something at the intersection of crypto and gaming or crypto and AI, they want founders that are mission aligned, that have been there before, that will be there, not just for the last 10 years, but Blockchain Capital will be there for the next 10 years. And so, yes, is it a challenging fundraising environment for venture capitalists like me? Yes. Is it a challenging environment if you're a startup building a protocol? It is. But blockchain capital's open for business. So is Andreessen Horowitz and some of the other kind of tier one investors that have been around for a while. But the tourists that come and go, they'll be back. They'll be back at the top of the market, and it's fine. What we need as an industry is to continue to capture the imagination of young people that are building new products and protocols and services that will change the way we interact with open source software, the way we interact with financial services, or don't want to be under the yoke of domineering internet monopolies in a surveillance society. These are themes, I think, that matter and that will continue to get more important. And so I just feel blessed. The culture of blockchain capital is putting founders first, to approach our job as a mission. For me, it's a calling. I exist to make founders' job easier so they can put a dent in the universe. Blockchain capital has been a midwife to this industry. Behind the scenes, we want to be the quiet professionals that allow founders to make their dreams come true. And sometimes that's with financial capital. Sometimes that's with regulatory advice. Sometimes that's with go-to-market. Sometimes that's with competitive analysis. There's a lot of things we do. I think on crypto Twitter, VCs get kind of a bad rap in many ways. But for the first time, the average kind of retail user on crypto Twitter is aware of a protocol. There's been thousands of hours behind the scenes of dedicated VCs at Blockchain Capital that have helped turn a founder's dream into reality. And we don't want credit for it. We're happy to stay behind the scenes and put the founders first because their mission is a righteous one and it's in line with the values of crypto culture. I think it's in line with the founders of this country. And yeah, if you can't tell, I absolutely love talking about this stuff. There is not a more interesting industry on the planet. I just feel blessed and honored to be a part of it.
Yeah, your enthusiasm is really contagious. I'm so excited right now and inspired just by talking to you. I can't leave this discussion without talking about the possibility of, I wouldn't call it a green light, but it was definitely a nice signal that we got from a court recently with the Ripple ruling. And I don't know if it's the beginning of the end of crypto winter, but of course I'm hopeful. By the way, for all our listeners and viewers, just a reminder, which we always put at the beginning as well, this is not financial advice, nor is it legal advice. So no one should perceive it as such, and you should consult a professional if that's what you need. But what is that effect on your portfolio companies? Are they cheering about this decision? Is this going to make a major change in things?
I used to make a joke that, when crypto first got invented and Bitcoin, my brother and I realized pretty early on that there would be other blockchain ecosystems, and there were bankers that were freaked out. Like my brother and I, who's my co-founder at Blockchain Capital, we're sons of bankers. Like our dad had an investment bank. We're not like anti-banking revolutionaries. And there was a bunch of people that were worried that like this industry would put bankers out of work. I'm like, no, you're focused on the right thing. It's going to put lawyers in work. Like when we fund companies now, the first couple $1 million goes to lawyers. Like, it goes to Goodwin, it goes to Latham, it goes to Mofo, it goes to all these, Cooley, all these firms that are having to try to figure out and do the guesswork around kind of what crypto means from a legal point of view. I have a contrarian opinion on Ripple, and I have had for a long time. I think the work that Chris Larson and Brad Garlinghouse have done, they're kind of the Rodney Dangerfield of crypto, didn't get a lot of respect. In fact, I had a semi-public disagreement with Ryan Selkis at Masari, who I respect immensely, and he's as OG as it gets. We've been in this business for 10 years together, and he had like a beef with Ripple for a long time. And I remember about 6 years ago bringing him aside, and I said, Ryan, we're going to need some really well-capitalized companies that can fight the feds, because they're going to come after us, and they're going to do it on unfair terms. And we're going to need the Coinbases and Ripples of the world to hire the best law firms, and it'll probably take 5+ years and maybe $100 million. And he kind of laughed in my face. And Ryan, to his credit, has been on, I think, Ripple's team since about 2020, and very publicly embraced Brad Garlinghouse with a big hug. But the point is, Ripple has been fighting the good fight. Coinbase is fighting the good fight, and we're not fighting for privileged treatment like the banks are. We just are fighting for the right to exist. It's a much different situation. And I've dealt with the SEC. Some of our portfolio companies, whether it's Ripple or others, have been sued. It's like dealing with the mafia. They show up. There is no recourse. They don't tell you when the investigation starts or when it stops. They bully these kids, and I mean kids. These are 2 Stanford dropouts. In my case, I was involved with a company that got sued by the SEC, and they were forced to close. And the money went back to investors and users and the SEC itself. These SEC awards, when you see some company or protocol gets penalized, goes to the SEC. There's no other branch of government that has that similar misalignment of incentives. And so what Ripple's been doing, and the what's called a partial win that we got last week. I think what we saw collectively on crypto Twitter was just a relief. Like, okay, the beatings have stopped for just 24 hours, for just our right to exist. We want to breathe. We want to create. We want to build. These are kind of righteous things. And, it was great to see that, our country has, the balance of powers. We've got the legislative branch, we've got the executive branch, and we've got the judiciary. And, what we're, I think, going to increasingly see is some of these judges, regardless of where they are on the political spectrum, be like, hey, you are a unelected bureaucrat that is playing dirty pool with no recourse, no supervision in terms of congressional oversight. I mean, yes, we have some, thankfully, some allies like McHenry and Emmer. They're asking tough questions like, is ETH a security? To Gary Gensler, he can't answer the question. My point is that, I think there's a real important moment in time here in terms of working with Congress to hopefully write some new legislation, but also I think it's the judicial branch's time to kind of not flex, but say, hey, this is way outside your mandate. You're not supposed to pick a technology industry and not publish the rules of the road. I mean, and so the Ripple, what's called a partial win, was just an incredible, I think, sigh of collective relief from our industry. You could almost hear it through the crypto Twitter speakers. But Coinbase's fight is important. Others, I think what we'll see is, I think, in the Blockchain Association, Coin Center, DeFi Education Fund, there's FOIA requests. It's time to go on offense. We, as an industry, need to fight for a right to exist. These are righteous causes based on the values that we discussed earlier. And this is an important moment in time to redefine how the human being and the state, what is that relationship? It's increasingly moderated by technology. And so that technology is increasingly going to be crypto. It's going to be AI. It's historically been mobile phones and cloud and social media companies. Those are the interesting questions in my mind. How does the state and the individual, how is that relationship moderated by a rapidly evolving technology industry? And that is our shared goal. If you care about crypto, you have to care about what's going on in DC right now. So I would encourage all of your listeners to get involved, to write your congressman, to get up to speed, to think about a donation to Coin Center, to the Blockchain Association, the people that are fighting this fight for us. And for disclosure purposes, Joshua, our general counsel, is a board member of the Blockchain Association. It's an organization we care very deeply about. We're in their offices right now, and I appreciate your efforts, Paul, and your podcast to educate the people here in DC that have a big a challenge in front of them. And that's one that I think we can all rise to kind of address together.
Thank you so much. This has been just an incredible discussion, and I think it is so important for policymakers to hear, and I know they're going to learn a lot from it. Before we wrap up, I wanted to mention that I'm teaching for the first time an MBA fintech class at Georgetown University this fall, and I thought it would be nice to have you just say something to MBA students, entrepreneurs, others, perhaps those who want to pitch you and become a portfolio company. Any advice that you'd like to share with anyone about what they should be doing right now?
I love talking to young people. I speak at college campuses frequently. Blockchain Capital recruits out of our leading universities, usually people that are engineers, computer scientists, data scientists, but also business people. It's somewhere between their junior or senior year. So you can send an email to info@blockchaincapital.com about our research scholar program. And listen, young people graduating from these institutions or going to MBAs have so many opportunities afforded to them. I remember when I was graduating from Princeton, all of my friends were going to like McKinsey or Boston Consulting Group or JP Morgan or Morgan Stanley or Goldman Sachs. And I was an oddball. I went to work for an internet company called E-Trade, which was the very first fintech company. And my career in life has been different ever since. So my advice to young people is to follow your heart and take some risks early on. It's okay to fail, to take some risks early in your career. I'm a 3-time founder. I founded an internet company in my 20s, a hedge fund in my 30s, and a venture capital firm in my 40s. And, my internet company didn't work. It was a cancer company. But those experiences, hiring and firing a CEO, raising venture capital, having to sell the company, picking out offices, closing down offices, those are really important skills. And I'd encourage, people that are attending Georgetown to, number one, go to your class, even if they have to sit in the hallway and listen through the door, and to take some risks in terms of intellectual creativity. don't just think about banking. Don't just think about management consulting. Think about other industries, whether it's AI or crypto, that might be a value line. We've talked a lot about values on this podcast so far. The best careers, I'm kind of a student of Silicon Valley history, and when I talk to some of the founders of the great VC firms or the great tech companies, whether it's Sun Microsystems, or talk to Brooke Byers at Kleiner Perkins Caulfield & Byers, or some of the founders of Sequoia or Mayfield, these guys they've been incredibly successful. They're in their 70s and 80s now, and they don't talk about their career as a job. You can tell they love what they do, and they've just been paid extraordinarily well for the work that they put in. It is difficult to start new tech companies. It is difficult to finance new tech companies, to see the future before it is obvious to anyone else. When Brad and I started Blockchain Capital, we were laughed at. We used to run $1 billion hedge fund, and we started our first fund. We had $1.2 million. And I remember it was Brooke Byers of Kleiner Perkins Caulfield & Byers brought me aside. He said, "Bart, I'm kind of worried about your career. Well, you used to run $1 billion hedge fund, and now you're managing a $1.2 million fund investing in Bitcoin. Isn't that just used for buying drugs?" And I was like, "No. Well, yes, Bitcoin in the early days, there's some people buy drugs. But more importantly, there's a really big story underneath the hood. Blockchain technology, we think there's going to be hundreds of blockchains or thousands or internet of blockchains." But what we also said is we think this is the early days of a new industry that is very similar to the internet. So my advice to students of all types is keep your mind open, take risks, don't be afraid to fail. If you have an idea for a protocol or a company in crypto, come to Blockchain Capital. We will help you out. Whether we invest in your company or not, we like to pay it forward. We've talked to over 10,000 companies and protocols in our 10 years, probably closer to 15,000 at this point. We've made over 200 investments. We manage over $2 billion. But at the end of the day, our mission is the same. We want to help build this industry in a way that is constructive and sustainable for founders, for investors, and that is kind of an industry that is inclusive and allows young people to kind of make their mark in a way that is aligned with their values. So to the students, future students of yours taking your crypto class at Georgetown in the MBA program, I would say, number one, take it. Number two, don't be afraid to contact us. And number three, take some risks in life, especially early in your career.
Great advice. Thank you so much. Again, thank you for your time. I'm so inspired. I feel like I'm just so thankful that you are a leader in this industry and you're funding companies, and you really care so deeply about all the values of crypto that I also care about.
I can tell.
So thank you, and appreciate you being on the PGP for Crypto podcast.
My pleasure, Paul. Happy to do it again. Thank you for our time together today.